Building wealth. Investing in assets over liabilities for financial security. Buy assets instead of liabilities. The concept of making your money work for you, often emphasized by investment experts, urging individuals to shift their focus towards purchasing assets rather than liabilities. This approach involves analyzing the potential of investments before making any financial commitments. What are assets? Assets are defined as items with economic value and future benefits. Contrary to common belief, the wealthy often fund their luxuries not solely from their capital, but from the returns generated by their assets. For instance, instead of directly purchasing a high-end car, it is recommended to first invest in real estate. The income generated from the real estate investment can then be used to finance the vehicle. By strategically investing and generating additional cash flow, individuals can maintain financial stability and spend without significantly impacting their safety net. Assets encompass various forms, such as stocks, bonds, and rental properties, along with items that are expected to increase in value over time. It is important that the appreciation of these assets exceeds both market inflation and the costs associated with maintaining them. Below are some traditional examples of assets that have the potential to yield financial benefits. Stocks. Stocks represent ownership in publicly traded companies and can generate income in two main ways. Firstly, through dividends, which are a share of the company's profits distributed to shareholders. Secondly, through capital appreciation, where the value of the stock increases along with the company's value. Investing in stocks can be advantageous when building a portfolio of assets. Bonds. Bonds are essentially debt instruments where investors lend money to companies or governments in exchange for regular interest payments and the return of the principal amount at maturity. Like stocks, the value of bonds can fluctuate, providing a source of cash flow. Various types of bonds exist, including fixed-rate bonds, inflation-linked bonds, floating-rate bonds, zero-coupon bonds, and others. Real estate. Real estate has a strong track record as a secure investment due to its capacity to provide rental income and appreciate consistently. Apart from direct property ownership, investors can opt for real estate investment trusts rights. These trusts enable individuals to buy, sell, or operate income-generating properties. Rights can be traded on major exchanges, similar to stocks, and there are real estate investment groups resembling small mutual funds. These groups facilitate ownership of rental properties without the need for direct landlord responsibilities. Time. Time is often considered a precious and irreplaceable asset. Unlike money, time cannot be purchased or regained once it is spent. Therefore, utilizing time wisely is crucial, as it enables individuals to invest in self-improvement by acquiring new skills. These skills can then be leveraged in the future to generate income, making time management a valuable asset for personal and financial growth. What are liabilities? Liabilities are expenses that result in financial loss, such as luxury items like televisions, expensive cars, and salon services. While some of these purchases may be necessary, it is crucial for financial stability that assets exceed liabilities. Certain unavoidable liabilities, like owning a vehicle, are common investments for individuals. Despite various options for vehicle ownership, many opt to buy one, irrespective of the perspective. A vehicle is considered a liability due to its guaranteed depreciation over time and the ongoing costs associated with its maintenance. Another common unavoidable liability is a personal residence. When you occupy a property that you own, it does not generate income and is therefore classified as a liability. Liabilities that can be converted into assets. In today's technology-driven era, transforming liabilities into assets has become increasingly feasible. Property owners worldwide are leveraging renting platforms to generate income from spare rooms, apartments, or condos by offering them for short-term rentals. Some even rent out a spare couch to travelers seeking temporary accommodation. Consequently, items previously categorized as liabilities can now serve as sources of revenue. Moreover, ride-hailing services enable individuals to convert their vehicles into income-generating assets through ride-sharing opportunities. Another common strategy for turning liabilities into assets involves time management. Downtime, or idle time, is essentially a liability as it is unproductive. Many employed individuals pursue side businesses or entrepreneurial endeavors alongside their primary jobs to optimize their time for increased earnings. Advantages of buying assets. Investing in assets rather than liabilities offers several benefits, with long-term financial stability being a key advantage. While short-term gains are significant, it is essential to plan for a future where regular income from a salary may no longer be available. Individuals who achieve financial prosperity post-retirement are typically those who have made strategic investments to generate passive income throughout their lives. In summary, investing in assets can be a wise financial decision as their value tends to appreciate over time. Conversely, putting money into liabilities may fulfill immediate needs, but can result in financial strain in the future. Therefore, it is crucial to prioritize acquiring assets over liabilities.